And these are probably the single most important things you can do to protect yourself, protect your financial position, and protect your health. So make sure you stay tuned for the entire video because all this information is very important. What's up everybody, David here with Free to Be, and in today's video I'm going to go over 5 tips that'll help you mitigate your losses during this time. I know that the coronavirus is out there and it's impacting a lot of families, a lot of folks when it comes to physical health or financial health, but there's ways to curb that specifically when it comes to your finances, and we're going to go over those today. As always, before we get started, take a moment and hit the subscribe button down below if you're brand new. We cover financial literacy here on this channel as I build a roadmap to my financial independence and hopefully build a blueprint that others can use. I also do feature my creativity on here from time to time and discuss some other lifestyle tips. And if you're not new, thanks for coming back. So the coronavirus is here, and if you've been watching the US stock market or the global stock markets, you have noticed that there has been significant losses in the past probably 3 weeks or so. While those are short-term losses that everyone is experiencing, there are some things you can do to kind of curb those losses and prepare yourself for the future. Now, as you may know, when you're investing, you need to check your emotions at the door. And this is definitely one of those times where you do need to check those emotions at the door, because during widespread panic in situations like we're facing right now, that's when folks tend to be overly emotional and hurt themselves in terms of long-term investment. Now, I do also have some common tips for you guys when it comes to physical health as well. The coronavirus is a virus, and the best way to avoid getting a virus is to make sure that your hands are clean and you avoid touching any kind of entry points such as your mouth, your eyes, your nose, especially when you have contaminated hands. Now that's probably the easiest way to avoid getting sick. Now there's no telling how contagious this virus is because it is fairly new, but if you just take that one measure, you definitely increase your chances of avoiding getting sick. All right, now when it comes to financial health, there are going to be times in your life where we're going to be faced with things like this. We're going to be faced with widespread panic among the public, which causes markets to kind of take a dip. Now, since probably February 10th or 12th, we've noticed about a 12 to 15% drop in the markets, depending on the day that you were looking at it, from the all-time high earlier in the month. But that's not to say that this is a crash. This is actually a correction with the market going back to what the market was in October of 2019. And from time to time, corrections do occur. And it's usually when a correction occurs, it drops back down from its high to about 15 to 20% lower than that rate. And it usually does happen in times of recession. But when there's panic in the world, especially on this scale with something so new as the coronavirus, something so novel as this one, you're going to see the same kind of reaction in the markets. But despite all this, in today's video, I want to share with you guys 5 things you can do right now to avoid issues when it comes to investing during times of panic, specifically right now with the coronavirus being so widespread. So the first thing you're going to want to do is you're going to want to keep perspective. Yes, the coronavirus is very serious. Yes, there's panic in the world, but you're investing for your future. You're investing long term. Past the 5-year point from now, 10 years, 15 years, you're looking 20, 25 years down the road. So something like this, okay, even let's say a worst case scenario, this thing is around for the next 2 years and we do, see real losses happen over that period of time, which I'm not a medical expert, but I don't think it's going to be impacting our markets and our people for over 2 years. So let's say it was 2 years that our markets kind of plunged consistently. You still have many years after that to recover these losses. So you have to keep perspective. That's the main thing you can do right now, and focus on your goals that are probably 10 to 15 years down the road. All right, now the second thing you can do is to continue buying, okay? It's really weird, but it's commonly said that the stock market is the only place where goods go on sale, but people are too afraid to buy them. In fact, they do the exact opposite. When they go on sale, people panic and want to sell their items at a lower price. It's really the only market that works like this, which is crazy. Right now, stocks are low. Right now, the market is lower than it was 3-4 weeks ago. If you do have cash, continue purchasing, consistently over this period of time. Now, that's not to say if you have $10,000 in cash to go invest all $10,000 today in the stock market in hopes that tomorrow it bounces back and you make a fortune. That's not how it's going to work. But do consistently continue to invest, and you'll realize that, 10 years from now, 15 years from now, you'll be in a better position than you originally thought you were going to be. Especially if your retirement is 10 plus years away. Trust me, none of these losses will impact you. And in fact, buying today will put you in such a better financial position 10, 15, 20 years from now. All right, so the third thing you can do is if you really can't stand the volatility of the market, which is understandable. Some people are just risk averse and they don't want to have all of their investment in one place, which is fine. You shouldn't be doing that anyways. But if you don't have a cash reserve, maybe now is the time to set one up, and maybe you get rid of some of those assets that you're holding in the market and move them to like a high yield savings account or a CD, something like that. So you have some cash deposits, some cash reserves in case of an emergency. That way you can kind of hedge your bet a little bit, and you're not, basically having all your eggs in one basket in terms of the stock market. So if you want to do that, if you're really risk averse and you're afraid of the volatile market and you don't know exactly how it's going to play out, go ahead and take some cash and put it into one of those insured type high yield savings accounts. And so that'll actually help ease your mind a little bit if you are in the category of risk averse type of investor. This will give you the cushion and the mind, the freedom of knowing that you have a little bit of cash here on the side in case of an emergency. All right, so the fourth thing you can do, if you are closer to retirement, maybe it's time that you reassess your retirement portfolio. Make sure that if your portfolio is primarily stocks, that maybe you shift these over to bonds, because you're going to want a little bit more security when it comes to the assets you're holding. And if you are nearing retirement, it's a perfect time to go ahead and reevaluate your holdings, reevaluate what you have in your portfolio, and kind of redistribute those investments to something that works better for you. And this really applies to people that are less than 10 years away from retirement. So while we aren't actually in a recession quite yet, this is a great time for those folks who are close to retirement to reevaluate their portfolio and invest accordingly. Make sure that your plan is set up for you. It has to be tailored to your goals, to your needs. So take a look at your portfolio. If you are heavily invested in stocks, it might be a little bit riskier for you. Go ahead and shift those into asset classes that'll be better for you, better suited for your needs, and you'll be all set. And finally, the fifth thing you need to do is to stay calm and stick to your plan. Remember, when you're investing, you always have to set a plan for yourself that's long-term. There's no such thing as getting rich quick. You can't go invest tomorrow and have your money go, quadruple or, whatever, 10x the value that it was today. That's just not going to happen. And yes, maybe it happened with the little cryptocurrency blip that we had in 2017, but that's not going to happen all the time. So you have to make sure that you have a long-term plan in place when you're ready to invest, and you stick to it. Stay calm, because look, yes, it is a serious thing that we're facing right now. The coronavirus is completely serious. I'm not trying to demean it at all, but investing is always a long-term strategy. So stick to that goal, stick to your plan, and this will blow over eventually, and you will realize some gains back, basically covering the losses or any losses that you might have actually faced today. The bottom line is, look, we have faced some losses in the past couple weeks due to this virus, but it's not the end of the world. These markets will recover, our market will recover, and your investments will be just fine. So stay the course, stick to your plan, and you'll be better off for it. All right, guys, well, that's all I had for this video. Remember, wash your hands. It's the single most important thing you can do. If you enjoyed this video, don't forget to give me a thumbs up. Let me know what you think in the comments down below, and we'll see you next time.